My question is, we do business in multiple states. What is our responsibilities for Pennsylvania under the new tax laws?
It really depends on what you do in those states. You have to understand that every state has a different set of rules, as well as a wide variety of taxes. We have income taxes, franchise taxes, gross receipts taxes, sales and use taxes. The other fun thing is these rules related to all these taxes are constantly changing. Every year, states change their tax laws. And it's very difficult to stay up with these changes. The most important question that we're always going to ask one of our clients is, how do you conduct your business? The magic word when it comes to state taxes is nexus. Nexus is what determines if you have a tax presence in that state for that wide variety of taxes. The rules may not be the same for sales tax as they are for income taxes. Nexus is driven basically by three different things. One is your sales or revenues. How do you transfer title to property to your customers? That's revenue. The second one is property. Now, property may be fixed assets. It could be buildings, could be equipment and machinery. It could also be leased assets, could be intangible assets. And a lot of times for a lot of our customers and clients, it's inventory that exists in those states. The third thing is the payroll factor. For instance, you could have a circumstance where you install property in a state. Do you send your own installers out to do that from your home state? It depends on how long they're there, what they do, and how frequently they're there. A lot of times, we will look at companies and to try and determine whether they have sufficient payroll nexus, because often that is the other item of nexus that will give you a state presence. So how can we help you with state taxes? Well, one of the first things we like to do is to do a nexus review. Obviously, we want to make sure that you're filing tax returns in the states you should be filing them in. We also want to make sure you're not filing tax returns in states you should not be filing them in. The other thing we try to avoid is establishing nexus in high tax jurisdictions. Obviously, there are certain states, such as California, where you would prefer not to have nexus. The last thing we do is try to make sure that you are structured in a way that will reduce not only your income tax liabilities, but often your sales tax liabilities. One of the things we find is often when we look at a client and they have not been filing in certain states, there's an anxiety level there that, boy, if we haven't been filing in this state for a long time, what can happen to us? We are very familiar with the state's voluntary disclosure programs, and we can file back taxes generally for 3 to 5 years. Generally, there are not any penalties involved with that, and if you file and are compliant for a 3 to 5 year period, it will absolve you of all prior taxes. So that's a very important thing to do. That's a very important thing to do, particularly if you're selling a business. On the flip side of that, when we have clients that are buying businesses, we like to look and do due diligence on the state tax filings that have been done by the prior company to make sure they've been in compliance and have been filing in all the states they should have been filing in. The other place where I would tell you to always have us get involved is when you get an inquiry from a state, whether it's about sales tax, whether it's about income tax, if it's an audit, or if it's just, a lot of times these states now are sending out mailers making inquiries as to what you do in their state to determine whether you have nexus or not. It's very important that you get us involved before you fill out those surveys and send them back to the states, because the way you answer that survey could well determine whether that state comes knocking on your door. One of the things that we help our clients with is determining what type of entity they should be. Should you be a C Corp? Should you be an S Corp? Should you be an LLC? Should you be a sole proprietor? It's interesting that a lot of times it's not the same answer in every state. For instance, you may want to be a C Corp in one state and an S Corp in another state. Our goal at RKL is to make sure that you're compliant in the states you need to file in, and at the same time that you don't pay any more tax than you absolutely have to.